what happens though during these periods is there's a flip-flop, and you have those income producing assets or those more valuable assets go down, and you see the value and the whether it's official or black market, you see in terms of this stuff, you see the value of gold go up.
The study also found that gold is the only commodity that the big allocators have added to over the last month. What is this? Yeah. So what is that indicating to you?
Well, certainly that the larger money managers, just like countries, are recognizing how vulnerable we are. And the reality is if you don't hold physical gold in your possession, when the currency hyperinflates, all of your wealth evaporates along with that hyperinflation. So these guys know that. Why are the central bankers buying it? To retain their freedom, to retain their power, to retain their choices. That is exactly the same reason why we should become our own central bankers and hold the physical metal. So what do they know? There you go. This is what they know, same as the central banks. But then you look at, there was a recent report from the Federal Reserve. The level of arrogance kills me, because when you are that arrogant, what you are is blind, right? You have to pay attention to what the world is telling you. And the dollar has been used. It was, I think 10 years ago, or maybe 20 years ago. I don't know. I don't have the data right in front of me. But 70% of the world were using the dollars in transactions. Now we're down to 50%. You have this decoupling and this shift in the synchronization of the central banks. And you see more and more smart money moving into physical gold. Yeah. But, you know, if they are not moving into the physical, then they are really barking up the wrong tree. Because these digital assets, I mean, yes, if you buy a futures contract on gold, and this is going to be interesting to see. If you buy a futures contract on gold, a derivative, well, in theory, that's just about trading it, right? So a lot of traders are doing that, just paper profits. It doesn't mean anything, but they like to see those digits go up, right? However, you're also manipulating the visible price that the public sees. So, oh, gold hasn't done anything. Oh, gold was in that, you know, the bottom of the cup formation. And if I had kept my money, you've got to look at the purchasing power. It's the purchasing power value of the currency that is the single most important thing to you and me. Not whether or not the dollar is stronger against the Japanese yen. Yeah, that matters if you're traveling to a degree. But the Japanese yen is also losing purchasing power. But that masks what's happening.
Yeah, to your point, you know, the ratio of being able to buy a fine men's suit for 1 ounce of gold, well, that ratio holds. But if you're using U.S. cash, you know, 100 years ago, that fine men's suit cost $25 today, or $20, right? And today, it's now almost $2,400 in the cash, but in the purchasing power of the gold coin, it's just one gold coin.
Right. And, you know, the other thing that I find really interesting is a few things. And so I'm going to give you a question too. But, you know, one is people need to ask themselves why cryptocurrencies are represented in gold and silver. Right? They've been training us away from this. They've been using the derivatives market to manipulate the visible price. So that was the next place that I was going. And then I have one more place. This would have been like 2009, I think, ish. And unfortunately, at that point, I didn't know my print screen button. But according to the bank but I saw this with my eyes and calculated it out, right? So I know this is true. The Bank for International Settlements, which is the central banker's central bank, showed that for every 1 ounce of physical, there were 62,000 ounces of derivative gold. 62,000 ounces of gold that does not nor ever will exist. Now, we know that along with inflation, the cost of mining gold also goes up. So, and we also know that gold is used in every single sector of the global economy. That has a true impact, but creating 62,000 ounces, and I'm sure it's much higher now, right? That was when I saw it, was back in 2009. And the derivatives markets and central banks' involvement in the derivative market has grown exponentially since then. So truthfully, there is no real price discovery in the value of gold because it is, or silver, or frankly, anything else. Food, water, energy, all of this is based on the trading algorithms. It's not based on real supply and demand. It's based on Wall Street traders. How does that make you feel?
Well, when you think of 8-9 billion people on the planet, economies that have more middle class than ever before, and only 3,500 tons a year produced of gold, it doesn't exactly make me feel that great if we actually get into a position of real price discovery.
Well, it makes me feel real great.
Well, I mean, I'm saying for the economy. So speaking of the so speaking of the economy, there's an old adage that says economic expansions don't die of old age, they get murdered. In other words, something comes along such as high oil prices, a pandemic, incredibly high interest rates, or war as examples that take down the economy. Otherwise, the expansion just continues on. In that light, Lynette,
it's not true.
No, that's an old adage.
Here's, I don't know how old that adage is, but in the day of money.
There's a recent an economist who's very well regarded recently stated that. But anyway, in that light,
Harry Dent.
I'm sorry.
Was it Harry Dent?
No, it was Jim Bianco.
Okay.
Yeah, but we wouldn't be in line, according to that adage, we wouldn't be in line for a recession or a halt to the current expansion until something like that comes along to do the job. So my question is do you see something coming, and what is the likely time frame?
Oh, well,
I mean,
timing is the biggest challenge.
Pick from the list, right?
I was just going to say, I see about 1,000 things that the debt wall with the higher interest rates, the fact that central banks can no longer control the inflation, and they're struggling to figure that out. So, I mean, frankly, there are about 1,000 things that can push this over the edge. I'm sorry, I'm 70 years old. What can I tell you? I don't look like I'm 10. I don't feel, I kind of sometimes do feel like I'm 10. It's very interesting about getting older. You don't feel that.
I think there's a movie, a Brad Pitt movie, maybe,
or 30 going on, or 13 going on 30. Or they've done lots of those movies. But I'm sorry, what they're talking about with expansion, and I'm going to tell you, as long as the central banks have the ability to do this, and I wish they'd do that, run out of money, but as long as they can do that, that's the expansion that they're referring to, and that's the debt expansion.
I'm glad you're bringing that up, because so many are saying that the economy is super strong, yet we're running this historic deficit, 6.2% of GDP. This has literally never been seen before outside of World War II, the Great Financial Crisis, and the pandemic. Outside of those times, we've never run a historic deficit like this, but yet we have this super strong economy. What would literally happen to the economy if we weren't running crisis level deficits and maybe balanced the budget or even got close?
Well, that's never going to happen. but I mean, seriously, I'm really, really sorry, but there has to be this major crisis that scares the crap out of people to a level where when they put some CBDCs into your Fed Now account that you didn't even know that you had, but you do. Yeah, they're trying. They need a large enough crisis to get you to go along with their program, and that's what I see. I see a huge crisis. I see a lot more unemployment happening. I'm watching it in slow-mo. We're watching on a global basis the real estate market implode. I mean, what's going to happen? It's going to be
let's talk on this topic a little bit. So defaults and bankruptcies, they're on the
100%.
rise, Lynette, and they're the highest since 2008, 2009. Yet not many people are talking about that. Many businesses, such as retail giants Express and the Dollar Tree, they've gone bankrupt, and they're not the only two. It's infecting most areas of the economy. Even senior living facilities seem to be getting hit. All of this is happening, and yet the economy is humming along. What should we expect as it pertains to bankruptcies and defaults moving forward? And how this is the one that's really puzzling me. How do you expect it to impact the communities that they're located in from a job and tax perspective?
Wow. Jobs down. I'll answer the easy one first. Jobs down, they go away. Taxes up, because that's how governments pay for stuff. That's how states and communities.
Tax revenues.
Pardon?
Tax revenue.
Oh, they tax revenues. Look, we don't just pay taxes on revenues. This is off the top of my head, there's about 56 different layers of taxes that we pay, and we don't understand that we're paying all of these taxes. All of those go up, and that makes it important to talk about properties, right? Because our homes are like the biggest investment that people that have homes typically make. And property, so real estate is classified as immovable property, right? So they know that they can raise the taxes on it, raise the taxes on it, raise the taxes on it. And what happens during those periods of time, this is another reason to have golds when I like fractional gold coins. You have to be able to pay those property taxes, or even if your property is paid off, then it's not really going to matter, right? You're going to lose your house. So taxes are, and we're seeing that. And the other thing, but this is opportunity too, because everything that we're talking about sounds like so doom and gloom, so doom and gloom. But there's also always opportunity in crisis, right? If you hold your purchasing power intact, right now you've got real estate, and we've got a whole bunch of zombie corporations that are going to go away, right? So we're going to see what is currently severely overvalued because of all that money printing, and gold that is severely undervalued because a rising gold price is an indication of a failing currency. And their job, to your point earlier, whether it's Treasury Secretary Yellen or Powell or Jamie Dimon, or I don't care who, those guys, their job is to keep you in the system because it's easier to rob you, right? So what happens though during these periods is there's a flip-flop, and you have those income producing assets or those more valuable assets go down, and you see the value, and the whether it's official or black market, you see in terms of this stuff, you see the value of gold go up, right? Then you can grab some of those gains there, convert into those other assets that are now severely overvalued, but won't be. And we're going to get an opportunity to see what corporations are going to be able to survive this, because so much of this is hidden. There are so many opportunities if you hold physical gold to convert into those other opportunities. It's not rocket science. It's just a repetition of history.
Right. It's just hard for folks to grab, to grapple with this when they've been trained around the stock market and 7 to 10% gains a year and the tech giants and all that. But so, Lynette, with the deficit spending as bad as it is, do you believe it is nearing a point where the bond market has some kind of like what I would call an aneurysm as it refuses to fund the Treasury spending levels. In other words, I heard you say it, a bond market crisis is inevitable. And in such a world, should we project that there may be, something like first a short-term decline in asset prices as the bond market seizes up, but then followed by an explosion in inflation-linked asset prices as investors finally realize what's underway?
Well, the answer to that is yes. And all you have to do is look at what happened in Venezuela, 2012, 13, 14. The best performing stock markets in the world while their currency was hyperinflating. So yes, people are going to run to whatever they think is going to hold their value more. But in reality, if all you can do is convert it into this stuff, sorry, but 1 trillion times zero is still zero. It doesn't matter how many of these things you have. I think I've got $100 trillion Zimbabwe note that I couldn't even buy an egg with, right? And people get, that's nominal confusion, that's intentional, that's their program. But yeah, I think, and I get that it's hard for people to comprehend, but I can tell you what I've done for myself, just based on all of those studies, is food, water, energy, security, barterability, which for me is silver, wealth preservation, community, which is arguably the most important part these days, and shelter. Because these are all the things that we need to, number one, retain our independence. So when the central banks say jump, you don't have to go how high. If everything you have in this, you're not going to have any choice.
Yeah.
Especially when we go to the digital currency, that they don't like your politics. They don't like what you say. They push a button. Look at what happened in Canada. Canada, right? They didn't like the trucker strike, which was a perfectly legal and peaceful strike. Boom. They just cut them out of the system.
So you've talked
money outside.
So you've talked a lot about the CBDC. That you foresee a crisis that's going to usher that in. To your point, on March 9th, 2022, President Biden did sign an executive order. It's 14067, and it's outlining a comprehensive approach to address the risks and leverage the potential benefits of digital assets and their underlying technology across various aspects. And this includes a CBDC. This is right there on the front page of the executive order. And then Biden stated that my administration places the highest urgency on research and development efforts into the potential design and deployment options of United States CBDC. So, I hear the siren call that you're making today, and I've heard it actually before from you, but I really hear it loud and clear. But again, some people are saying, it's just research. They're looking into it. I'm pretty sure there's over 150 countries now that either have it or are in some stage of development.
Yep.
But my question is really, how realistic is it that they could institute a CBDC with the world's reserve currency to the level that you just talked about, where they have that kind of control and can control everybody's lives down to that minute perspective? How realistic is that?
Gary, I am so glad that you asked that question, because there was just a recent Bank for International Settlements report on the fact that once the U.S. had those issues with the regional banks, Silicon Valley Bank, et cetera, and then also with FTX, that the U.S. has kind of turned away and slowed that down, allowing other countries like China, Switzerland, I can't remember who else were in this report. I can send you that link if you want it. That the U.S. is falling behind those other countries in the development of a CBDC. That's actually even more dangerous to our retaining some level of importance in the global financial system. But I also want to be really clear on something, because I think this is critical for people to know. People say, well, but I won't have any choice, right? If they put in a CBDC, I'm just going to have to do it. At this point, we have a choice, and we have to become as independent and self-sufficient as possible. So we vote with our wallets, and we don't allow them to have that control. It's like so interesting, because when that's been tested, like in Nigeria, for example, and yeah, people would use you get free money. Okay, you'll go out and spend that free money. It's, will you take new money and put it into that system? And that's where those central banks, other than China, who actually what's happening in China also gives me a level of hope, because we're seeing dissent amongst the public and different quiet ways that they're rebelling, with children, other thing, that's a whole nother show. But, we are clearly in a danger zone. And if we do nothing, we have chosen to fail. And here at LynetteZang.com, we have a strategy that's based on my studies of currency life cycle since 1987. And I don't know too many other people that have been doing that, right? And it's just based upon those repeatable patterns. And it takes all of that into consideration. Now, I've been working on that piece in earnest. I've been accumulating gold and silver since, well, way before, but in earnest really since 2002, because that's when the formulas told me that we were starting on this piece. But it was 2008, like I said, when I bought this property, and I went about, okay, where do I feel vulnerable? And this is what I think everybody needs to do. You step back and you go, okay, where do I feel the most vulnerable? Because it can be overwhelming. And then you do something to not feel as vulnerable in that area. But we don't have the luxury of time that I've had, because I bought this property in 2010, and I bought my bug out property where I'm doing all of that, all the mantra pieces, in, I think maybe like 3 years ago-ish, something like that, after the pandemic. And we just don't have that luxury of time. You ask me when, and when is always the biggest challenge of technicians. I can tell you what is most likely to happen, but I can't say, well, it'll happen at 2:35. But it could happen Tuesday.
So you talk about, people need to basically band together and to fight now. We do have a choice now. Well, when you consider the ongoing inflation, the massive increase in debt that people are taking on, it's getting substantially harder for them with extra cash to start moving. Their savings are below mean from the last 25, 30 years. So it's getting harder and harder for them to have cash to move, into the savings of gold and silver. Yep. And they've been programmed to believe, all of us have, with the markets, that the safest place to be, the best returns to be, is going to be that 60-40 portfolio. And that's where they're living. And so it's really, and it shows up in the stats, less than 0.5% gold ownership. It's 4 to 8 times below historical mean. Mm-hmm. And hopefully from my vantage point, it won't take a crisis to get people back to gold ownership. But right. I am fearful that it will. But before we wrap up here and I ask Lynette our final question, I want to point everyone over to our Substack. It is free. Go to metalsandminers.substack.com. We post free content on the consumer economy, markets, artificial intelligence, individual metals and miners, and every single interview like this one that we conduct. And when you subscribe, we want to give you a free gift. It's a report we wrote based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." This free gift is a must read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive this free gift on us. Also, if you've enjoyed this conversation that we've had with Lynette as much as I have, please let her know by hitting the like and subscribe button and leaving a comment below this video. All right, Lynette, in wrapping up our discussion, I have a final question for you about being equipped for what's coming. You've talked about this in bits and pieces throughout our discussion. You speak about being equipped for what's coming our way in the key areas of food, water, energy, security, wealth preservation, barterability, shelter, and last but certainly not least, community. Right. Can you briefly put a bow around all of this from the perspective of what we've been talking about to urgently prod folks in that direction?
Yeah. Well, like I said, we are really running out of time. And so people don't have the luxury of time like I did to create the community around me. And because they don't, or they can't afford the gold and silver, and I was just having that conversation this morning with Adam, then we can come together and bring the gifts that we have. That is something I learned a while ago. That's another story for another day. But, maybe you can like, for example, in the community that I'm building for my bug out location, I'm building enough food to take care of 40 people. Well, who are those 40 people? I have doctors, I have teachers, I have farmers, I have engineers, I have built carpenters, I have plumbers, right? So we all have a gift. We all have something that we can bring to the community to help support each other through this. And that's really the most important thing. And I really discovered that. I mean, my mantras that I've developed over the years, but I was in Australia working on building community and talking about my normal dog and pony that you can see on the YouTube channel and all of that. And I had 3 events that I was doing. And the first one, I did my normal thing. The second one and the third one, I threw all that stuff out. If they want it, they can go to the YouTube channel and see it. And all I talked about was community. And the entire time that I did, I had chills running through my body because I know and I'm getting them right now, because I 100% know that if we can come together in community, and how do you do that? People say, well, how do you do that? Go to your local farmer's market, even if you're living in a big city. Get to know who creates your food. Go out and volunteer. And, I'll go in and I'll muck the chicken stall, right? On my little urban farm here, I have chickens and I have a chicken coop, right? Bring value to the table. Create that relationship. Get to know your neighbors. You don't have to try and convince them of anything, but there is safety in numbers. Look at the rise of the unions that we are having, right? It's huge. These are the things that give me hope. But I would say that's why community has really risen to the tippy top of my list, because divide and conquer. We've got to come together and then we can beat them. And Ray Dalio, to your point, Ray Dalio is looking at a revolution, isn't he?
Yeah. Well, yeah. And he's somebody to go read up on and really listen to. His research, I think he goes back over 500 years on his cycles. Yeah. Lynette, this has been amazing.
Have to do it, right?
No, he doesn't. No,
he doesn't have to do it. He does it because that's his calling. That's why I do this. This is my calling. This is what I was put on the planet to do.
Well, it's incredible that you're in your calling. I appreciate it. I know everyone who's watching here today appreciates the message you're sharing, the analytical background that you come from. Mm-hmm. It's been so good spending this time with you. Thank you for coming on to the Metals and Miners podcast, for being so generous with your time, your analysis, your ideas. Would you please tell the viewers any final thoughts that you want to share with those tuning in, where they can learn more about your work and how they can connect with you?
Well, number one, I agree with you. Stop procrastinating. We only have as much time as we have, and I know we're at the end, so I think anything could happen at any time. We are a new company. I was with ITM for 22 years, and I left them the end of January because I needed to be able to have the voice to say and show and do what we need, what people need from me. So right now, we are very heavily into YouTube at the Lynette Zang. We're on Twitter with the same handle, the Lynette Zang, Instagram at Lynette Zang, as well as Facebook. But we will be any minute opening up our new website. Well, there'll be a countdown clock, and when we can really help people at a much deeper level with their own personal customized strategy based on their goals first, period. That's what we put first. And then their circumstances, and we put together this whole strategy. We're going to be able to do that very, 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 very soon, and also help people position into physical gold and silver.
How exciting. Well, I will put up all of the information that you just spoke about. It'll be up on the screen. It'll be in the description of the video. Everybody needs to go follow you. Everybody needs to listen to what you're saying, heed your warning, and start preparing. Thank you. I look forward to having you back on, Lynette. Thank you for being here. And everybody else, thank you for watching. I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and of course, all of the interviews that we conduct. And when you subscribe, we want to give you a free gift. It's a report that we wrote based on an important Ray Dalio foundational premise titled, "If you don't own gold, you know neither history nor economics." This free gift is a must read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe. It's free, and get the free gift.